In my last video, I told you that an LLC does not automatically save you on taxes, but I also told you there is a way to use your LLC to dramatically reduce your tax bill, and today I'm going to show you exactly how. It's called the S-Corp election, and it is one of the most powerful tax strategies available to self-employed people. Stay with me because by the end of this video, you're going to understand exactly what it is, how it works, and whether you qualify. Today, we're talking about the S Corp election, what it is, how it saves you money, and who it makes sense for. First, let's do a quick recap. When you're self employed, you pay self employment tax of 15.3% on every dollar of profit. That covers Social Security and Medicare, and unlike a regular employee whose employer pays half, you pay the whole thing yourself. Now, when you form an LLC and elect S Corp status, something changes, and that change can save you thousands of dollars a year. Here's how it works. With an S Corp election, you split your business income into two buckets. Bucket one is your salary, a reasonable wage you pay yourself as an employee of your own business. Bucket two is a distribution, the remaining profit that flows to you as the owner. Here's why that matters. You only pay self employment tax on your salary, not on your distributions. So if your business makes $100,000 and you pay yourself a reasonable salary of $60,000, you only pay self employment tax on that $60,000. The remaining $40,000 comes to you as a distribution with no self employment tax on $40,000 at 15.3%, that's $6,120 in self employment tax savings every single year. That is why people talk about the S Corp election. That is the strategy. Now, let's talk about how you actually do this. Step one, you need to have an LLC already formed. If you don't have one yet, go watch my last video first. Step two, you file Form 2553 with the IRS. That's the election by a small business corporation form. This is how you officially tell the IRS you want your LLC to be taxed as an S Corp. Step 3, timing matters. You generally need to file Form 2553 within 75 days of the start of the tax year you want the election to take effect. So if you want it to apply to this tax year, don't wait. If you miss the deadline, there is a late election relief process, but it's easier to just do it on time. Step 4, once you're an S Corp, you must pay yourself a reasonable salary. This is not optional. The IRS specifically watches for S Corp owners who pay themselves little or nothing just to avoid payroll taxes. Reasonable salary means what you would pay someone else to do your job. For most service based businesses, that's somewhere between 40% and 60% of your net profit, but it varies by industry. Step 5, you'll need to run payroll for yourself. That means setting up payroll, withholding taxes, and filing payroll tax returns. Most people use a payroll service like Gusto or ADP for this. It costs a little money, but it's worth it compared to what you save. Now, who does the S Corp election actually make sense for? This strategy starts making financial sense when your net profit is around $40,000 to $50,000 per year or more. Below that, the cost of running payroll and potentially hiring an accountant may eat into your savings, and it makes the most sense for people who are consistently profitable, have a stable business, and are paying a significant amount in self employment tax every year. It does not make sense if you're just starting out, your income is inconsistent, or you're not yet profitable enough for the savings to outweigh the administrative costs. What are the ongoing requirements once you make the election? You'll need to run payroll for yourself every pay period. You'll need to file a separate S Corp tax return called Form 1120-S in addition to your personal return. And you'll need to keep your business and personal finances completely separate, which you should already be doing. Most people who go the S Corp route work with a CPA or tax professional because the filing requirements are more complex. but the tax savings more than cover that cost once you're at the right income level. Here's the bottom line: the LLC itself is just a legal structure. The S Corp election is the tax strategy. If your business is generating consistent profit and you're tired of writing big checks to the IRS every year, this is worth looking into seriously. If you want to talk through whether the S Corp election makes sense for your specific situation, I have free 15-minute consultations available. The link is in the description, and I would love to help you figure this out. Grab the free tax savings checklist in the description too. It's a great starting point for understanding all the ways you can reduce your tax bill. Drop a comment below and tell me, are you currently operating as an LLC? Are you thinking about the S Corp election? I want to hear where you are in your business journey. I read every single comment. Subscribe if you haven't already. New videos every Tuesday and Thursday. I'll see you in the next one.